What's up, guys? Gals, and everybody else. Yeah, we are not doing so well today. So today is day one that I got to trade in my new account, my new prop firm account, and I screwed up. Now, when we got on yesterday, we made an indicator, right? We made one on here together, and it was retracements, and so this was the indicator here. Let's see. But I told you, I said while I was making the indicator, I said I'm not going to look at any other days for this indicator. I'm just going to make it. I'm just going to make it for yesterday. And that's all I did. I just made it for yesterday, right? And so this was an entry. This was an entry, and this was an entry. I also made it with these red ones, right? So the red ones, the red crosses, and the black crosses, right? So for yesterday, looked great, right? Looked great yesterday. And of course, again, I said I wasn't planning on looking at it for any other day. I was just, I was just looking at some coding, some programming to make sure that I had a good grasp of programming, that I could whip it out pretty quick, no pun intended, and that I would be able to put together a program, fairly quickly. I think it took me about an hour, but that was fine. The problem is today, so even when I went back a day or two, it did okay. It did okay on those other days. See? But like when you make a program, you really have to look back through multiple days and multiple days and multiple days. And if I had even done this, instead of going back just one day, I think I just went back one day. Instead of going back just one day, if I'd have went back multiple days like this here, I'd see that there was just way too many. God almighty. Look at how many entry signals that is. That is no good. And the problem is I used it to take my entries today. And yeah, so anyway, we got a bunch of them in the pre-market. I did trade some of those, and that worked out okay. But when we got into here, this one fired off, and I think I got in that position. I may have stopped out there. I got back in here, and it worked. But then when we got down into here, it really chopped me up. It really messed me up because I think I was up on a couple accounts. The combine, the practice accounts, they were up $300 or $400 a piece, and then I messed up my regular combine in here, and then I came back on the practice combines, and then I screwed those up in here with these. All right, so we just got another signal. That's the alert, right? So I messed up my regular combine in here. Now, if you were to take that entry there, what would happen, right? I don't know. Let's see. I think I'm back able to trade now. Can I trade? Now, I'm not going to trade it, but so I'm with Top Step, and yes, because we're on a new day here now, I can trade it, but I'm not going to. And I'm a little bit scarred because I've been working on, getting this account active for a while here now, and now I got it going, and first day, boom, took a L. So I'm a lot more cautious, and I'm going to take a little bit more time to put these algorithms together and have some better entry signals. But today was just a super chop day. I mean, I even went back and looked at it just from a pure technical standpoint, and the only thing that I really see, right, is, I mean, you got this potential break here, and it moved up nicely, and then you got this break here, and then from that break down there. So I don't know. I was even looking at it today. It's like, all right, well, what can I code? What can I code to find some potential entries? And just looking at it, I'm just like, man, I don't know what in the world is going on. So this is the descending trend line script that I put together. Ooh, you just got a new one? Okay, so this is the descending trend line script that I put together some time ago. And if you look here, based on this particular descending trend line study, it doesn't look like we're ready to like really shoot long to go long again. It would need to break over this trend line before it does that, or it'll create some other trend line lower and then have to break that. But either way, yeah. So it looked like, oh man, let's take a long there, right? Where was the alert at? Let's take a long there. I don't think so. I don't think we're ready yet. All right, but if on the 5-minute time frame I had have traded this blue dot. Now this is I don't want to say a tried and true, but this blue dot. This one here is a script that I made on, I guess, obviously 4/27/24. So this one I made, I guess, a week or so ago. I thought I made it prior to that though, but this one seemed to have done better, right? So blue dot here, go long. Blue dot here, you had some length there. Blue dot here, go long. So that one worked, 5-minute time frame. And then, you know, this red and blue one I've been telling you guys about here the last couple weeks or so, for like the intrinsic structure. So not your external swing high, swing lows, your larger, higher time frame swing points, but you know, just kind of scalping, right? So the red goes short, the blue go long, right? So if the red, when this candle finish, and this red dot comes up at the end of the candle. It doesn't come up at the beginning of the candle. It comes up at the end of the candle. The end of the candle is right here. So if you had got in right here for a short, I mean, you'd be in trouble. And again, like I spoke about yesterday, you might want to take these entries like on a half retracement. So even if you had got in, if you had saw this as a short potential, got in at the halfway retracement of the bar, went short, that would have been a good idea. But this long here, this blue, if you had waited for the 50% retracement down to here and then went long, you would have got stopped out. This red here, red bar, here's the range, the whole length of it. If you had got in at the 50% retracement here, you know, could have made some money. All right, so the blue got in at the 50% retracement. You know, maybe that's what I just should have done. Because I said that yesterday, but I didn't trade it that way. To get in at the 50% retracement. However, I was at the gym during this time anyway, right? So I didn't get home until this move was done. I got home right around this time. And I think this was the first trade that I took. And this red cross here typically means go long, right? So here I was ready to go long. And yes, it did have some move to the upside from here. Was the end of the bar because this is a bearish bar, so this was the close. You go long from here. It just went right within this same consolidation zone, right? And so I'm like, yeah, I'm not taking this. I need to wait for the breakout anyway. Well, it didn't break out and it broke down. So I didn't take profit there and, you know, got stopped out, whatever. All right, so the blue here, I don't know if I got in there for a long or not. And if I did, I was looking for the break of the high and I didn't take profit. So again, screwed up the prop firm account, the express funded, the funded account, if you will. Right. I put it in a frame and everything. Boom! Just going blow it. I was telling some of my friends, I said, man, I need to just slide that plat right up under the couch, because I'm not doing what it takes to maintain that. Okay. A couple of couple of house rules, a couple of things to go over. One, we were talking the other day about whether or not TradeStation has free data feed for futures. They used to, but as of the 1st of January, apparently they don't anymore. So look at your account statements, guys. I just put like, a couple dollars in the account. Look at that. See, that is starting to retrace up some, right? I put a couple dollars in the account and just let it go, right? So I had some of my equities account, some of my futures account, some of my options account. Anyway, for the last 5 months, they've been taking money out of my equities account to pay for data feed. So as of the first of the year, you do have to pay for data feed for futures now. However, I think it's $20 a minimum, which is like the general package. And then in order to get like level 1 data and that kind of thing, real-time data for whatever market you want to use, you gotta sign up for that specific. I wish I could pull it up. I'll pull it up on another day, but you got to sign up for that specific feed. So I'm only using ES and NQ. So the CME is what I use. What is it? Chicago Mercantile Exchange. So that's what I use. But there's also CBOT, CBOT, and then there's a couple of other ones that other futures trade on. So I didn't need those. So I was being charged $40. So now my charge is $25. So $25 a month gets me the data feed for futures, which I need this because in order for me to work my algorithms and my scripts and everything like that, I do need the feed. So that's just going to be a bill that I've just got to suck up and take. Yeah. Rewind that and throw that out. Okay. But at least with my commissions for futures for the minis, it's I think it's 75 cents for a mini and it's like 25 cents for a micro. They did have a new subscriber plan or something like that where you can get the discount promotion at that rate. So, and I think like TD Ameritrade Schwab is still like $225 per contract per side, right? So whereas with TD Ameritrade you're looking at what, $450 to get in and out of one contract. With TradeStation you're looking at $150, which is a whopping 33%, so a third. So it doesn't take many contracts. So what is that? You're saving $3 per contract in and out, and I'm paying $25 for a data feed. So that's essentially what, 7 contracts? If I trade 7 contracts, then I have broken even on the cost of my data feed. And anybody who's day trading is going to trade more than some 7 contracts. I can tell you that. So that being said, the data feed, it's okay. I'll live with it for now. Let's just go over a couple things, and then I'm probably gonna get off here today because my mind is a little bit warped from that L I took. So let's see, is that still? Yeah. So like I said, that plus is working here, but I don't trust it. I don't trust it because I got chopped up so much. And honestly, the black crosses didn't mess me up as much, right? So there's a black cross here, and I think I got in right here, but I didn't take profit. And then it showed up again here, and so I said, all right, well, I'm gonna just hold my position. And I probably even doubled up because I was like, okay, well, this is a retest. This is a second touch. We're about to go back up. And then when it really started consolidating through here, I said, oh, we're in trouble. And then it did flush. But we got another signal here, which was another fake out because it didn't break the 9, the black dotted line there. And then when it came down here, we got another cross. Now, without going back into my program, I forget what the Well, let me go back into it. Because all these black crosses come in at a certain level. So essentially, it's looking at a certain level, it's looking at a certain amount of volume, and it's looking at a tail, a certain amount of tail on the candle. And that's why all these black crosses kind of come within this same region. And why would you say? Well, they all come in this region, right? They all coming in this region. And that's, I mean, that would be decent technical analysis anyway. This is the it's the higher low of the pre-market, right? So here's the higher low of the pre-market. So not surprising that it moved up from right there. But you could have saw that without all this programming. That's all I'm saying. So, today on ES, one thing that I can show you that you might have not saw on your screen because you may not have the bid and ask pulled up, right? So this level down here is the bid and ask. So this is what comes in on, I guess, level 1, right? So you see here, there's a huge amount of bids to come in. So you see what happened at the first of the day? First of the day, it's kind of going sideways. And then as the chart moves up, it did break this high here. It broke that high here. And then it made a higher high, pulled back to that same line. But then right as it was pulling back, that higher high there, we got this huge amount of bids coming here. And then what did it do from pretty much this level? What did it do from that level? It flushed. Right? So keep an eye on this kind of action. This kind of those intrinsics of the market that just are kind of bizarre. And like I say, it kind of came out of nowhere. Plus we got this high level. Now, that's the other thing that I wanted to point out is as I'm sitting here trying to figure out, make sense of the market. No, don't do that. What did I do? I put this with the spread. That's okay. That's what happens when you're dragging everything around. There you go. Okay. All right. Not too much happened with the spread anyway, so we don't really have to go over that. All right. Let's drag all this down. Yeah, I get in trouble when I click and drag stuff. Because you'll drag something from one chart to the next. Okay, but so like I said, huge amount of action right here. You got to pay attention to this. All right, and then the next thing is you see when the market opens, there's a lot of action, there's a lot of volatility, a lot of volume just flushes in. You see how large this bid is here, and I don't know where it came within the bar. Okay, but you see this high bid here. That means that this is the largest bid or ask, right? So for each bar, it's telling me who had the largest size, right? Who in the room had the biggest back, right? Was it the bidders or the sellers? And this is saying that it was the bidders. So essentially they're, looking for the downside of the market. So big blue right here, right? Big blue. Now, I think this is something that I'm going to have to pay attention to, or that I will start paying attention to. Because like I say, when the market first opens, you have a high amount of volume, you have a high amount of ticks, you have a lot of volatility. But like this number here, this number should be, or typically is, really high because the institutional traders and the larger market makers and market movers, they need to set the pace for the day. So sometimes they have to come in with a large order to really control the market, right? And so look how high that is. That's up to 179.35. And then you really don't see anything that high throughout most of the day. But look, you got another one that was really high, up to 164, right? And what happened right there? What happened right there was that the market opened, moved up, found all those bids, so it sold off, and then we had that we hit the ass side of the market, the top side of the market, right here at a level of demand, and then when it hit that top side, what did it do? It moved up from there. It moved up. It moved up. And then it finally moved up. You know, that kind of thing. All right, but then so you just go on with like normal orders, normal bids. You know, these are the small guys. These are, you know, HFTs, high frequency trading, that kind of thing. You get a higher one right here, and then you say, oh, well, are we about to push back down? Well, not necessarily, not right there, but so that was here. And so we did tap that again once, twice, 3 times, a lady. And then we did drop a little bit, dropped a little bit. This one here, this is a little bit higher on the bids, but it didn't drop down. It didn't drop down, it moved up. But what happened here? Now you got one that's like considerably higher, which is high just like these other guys, right? It's in that zone. So when you got to that zone and you got this high amount of bids, you know, the market sentiment, what did it do? From there, it sold off. So that's the only thing that's, like I said, I wasn't able to get a lot of just kind of looking at the market, getting the market to make sense for me from a technical standpoint as much. But those intrinsics there, that's what I pulled out of the market. So I was going to do a little bit of programming today, but I don't think so. I don't think so. You know, if I do get on, then I'll get on a little bit later, and then I will make it into a video. I'll do like a fast forward type thing, because your boy is not feeling it today. Look at that. It's trying to make a move. I should have took that entry. Doggone it. Should have took that entry. But the blacks seem to do better than the reds. So, but anyway, I'm going to take this one off. Either I need to take it off, or I need to fine tune that script, because I think the script has potential, but it needs some work. So I'm actually going to remove the after hours from the equation. So it's got to be Eric's Market, which does not include after hours. Sorry, guys. Oh. There we go. What? Retracement indicator 0506. All right, well, what is this one? Yeah. Eric's Market. Oh. There we go. All right, so now the blacks and the reds only appear during the typical market hours. All right, so let's go to a blank slate and let's put something together. Stop being lazy. Put something together. Yeah. I do want to be lazy today. I just want to cry and sulk a little bit. Just a little bit. Just nothing's jumping out at me. I hope other people traded this much better today. Did I get any indicators here at this 10:04? Because I should have. 10:04 did not get anything. Well, it should have gotten. I'm thinking it should have seen this high, and we moved above it, and then we find that as a potential entry. So I don't know why. I have an idea why. Because it's not just the high, right? So the high of this move would show like this much, and since the okay, I see, because the low didn't cross that. So my script will say that the low has to cross. So from here to here, the low has to cross this high, and it didn't. This was the low here. Dang it, that would have been a good entry. That would have been the best entry. Shippy. Part of my problem is that I feel like you can have a perfect entry and you won't have any you'll have very little, if any, drawdown. That's part of my problem. I feel like you can get in here or here, get in right here, and you have no drawdown. Whereas a lot of times you got to get in here or you got to get in here. So got to be careful of that, because it makes my trades too tight, and especially if you get into a chop range. If it's really a trending market and there's very little pullbacks, they're just up, pause, up, pause, up, pause, then you're fine. But if there's, you know, big pullbacks, then you're in trouble. You're in trouble. All right, so let's not only that, but this turned out to be a level. So from here over. So their price went up, touched the 9. With no significant. I'm about to make this super complicated. I can see that now. So what I'm looking at is, all right, so say you have this high. All right, now price moved up over the high, came back, retraced down. However, this move down did not what if I look at the fair value gaps that are made, right? So you see here is a fair value gap from here to here. What if I say that the retracement does not break the fair value gap? Then you want to take the long, or you want to continue in the direction of the 9-period moving average. So there's a fair value gap there. Move up, move up, move up. Nothing. price came back to here. Under the 9. See, this is the stuff I typically want to kind of look at prior to coming on and getting ready to do any coding. All right, but I tell you what, let's just look back at yesterday and see what happened with the bids and the asks yesterday. Those are super small. What do we got going on here? So here I'm just looking to see how high this ask is. The chart moved up, but then it kind of paused right there at the ask. This bid is high here, but then it pushed up, whereas it did the opposite on today. When you got a high bid, it dropped the market. Or like this is high. See, these are high enough. Let's see, 131. This is high, 250. And when you get that 250 up here, what happened after this 250? Well, it didn't drop. It kept pushing. I mean, it did retrace, but then it kept pushing up. Oh, excuse me. This shit is wearing me out. All right, and you see you have here the high bids, bid pressure, selling pressure. It did indeed cause a retracement, but it caused a retracement right down to that prior high, and then it pushed back up. Yeah, I'm gonna probably have to step away from the charts for a little bit, because when I get to having this kind of, it's not tunnel vision, but when I get to the point where I'm not seeing things, it's because I'm too close. So I need to step away and come back with fresh eyes. So yeah, I'm not gonna force it today. I'm gonna hop off here. If I do have something substantial or significant to come back to you with another video here in the next day or two, then I will. If not, then I won't. So meanwhile, oh, but there's one thing that I do need to figure out is I got chopped up today on my actual account too, my live account, and I was in that same area where I was getting signals from the let's see. I was getting signals from the indicators, and I was trying to trade those signals, and it just wasn't working out. Well, did you know that, yeah, got in at the very top to go long. Got out at the very bottom. Market reverse. Very top. I mean, they know what I'm doing, man. I tell you. That's what I say. I mean, but honestly, that's why I funded this account again, so that I could go back and just put some of my trades in automation. So we're going to see how that goes. However, I learned something today that they took me out of this position here. What was I? I was long here, and they took me out right here. It could have went back up, and I could have got out, made that money. But you see, I had my stop up here. I had my my PT up here, and it didn't go up there. I mean, not in a reasonable amount of time. But damn, even if it had went up there, it would have just barely, you know, it wouldn't have taken me out. It was like a tick off. But anyway, so trading futures with TradeStation, you have to have, at least for mini ES, you have to have a 13 point, what is that, 60, 75? That doesn't seem right, but 13 points on micro ES is $65. I didn't think that the margin was that amount. But if you are in a position and you don't have a stop loss in 13 points or shorter, then they will auto liquidate your position. And if TradeStation auto liquidates your position, then they will charge you $75. And that's what they did to me. They auto liquidated my position, not because I didn't have funds in the account or anything like that to cover it going down this far, just because when you use their margin, it's in your contract and everything like that, that you will have a stop loss in at least 13 points or shorter. Now, when we own these prop firms and we doing all this stuff, you're just putting on trades, and you don't have to have a hard stop in, that kind of thing. But TradeStation don't play that. Now, they will liquidate your position if you run out of funds to maintain that margin, but they will also liquidate your position if you don't have a protective stop in. So I learned that. That being said, the scripts that I put together, I don't know that they don't have protective stops that send an order to the to the network. I know they don't. They do have protective stops that when the price gets to that level, it gets hit and it'll take you out. But that's not sitting on the chart. So I've got to figure out in my program how to add that to the program. So that's pretty much what I'll be working on tomorrow. I will work on a script for today to try to make sense of what happened today. But hey man, we're all in this thing trying to do better. So if y'all figure out the code before I do, if y'all figure out the cheat code, then let me know. All right, I'm Eric. I'm out. Peace.